morning. Today is Monday, the 3rd of February, and this is the weekly recap for our current positions. The Feb BTB Rhino was closed last week, so it doesn't show in my live positions. We can go back to it on Slack if you wish to. Nothing really special. It was closed exactly flat. I mean, if I look at the reports, yeah, Feb BTB was closed for exactly zero. Plus minus, of course. IB has a commission structure, so it's probably a few dollars lost, but nothing big really. Okay, so this is for B2B. Feb trade is actually doing fine. There's no risk on the upside. The upper exposure line called UEL sits at 105, and this is the sweet spot. Delta is still slightly negative. Delta to Vega ratio is generally more useful this late in the trade in low IV. So I would say this trade is still doing fine. It's absolutely fine. Now at 18 DTE and a planned exit by 14 DTE, the thing is that now it would make sense simplifying the trade or even closing it. So there may be some adjustments coming over the next few days in the view of closing it by Friday. If you look at the Slack team on Thursday, 6 p.m. my time, so just before the open, I sent a proposed closing sequence for FebReg. You choose which one you want to go first, but the essence is that choose the trade by keeping the Greeks in balance. So for example, if I was to start with a 37.5, we would get a slightly positive delta, which is probably fine, but you know the market has been dropping, so even though this trade would be just as safe as the original, this is probably not the way to start the scaling out of this trade. Okay, so I would probably go and start the capital reduction with the bottom broken wing butterfly, that short fly here, and at the same time it brings a small credit, I would say maybe 10 or 20 cents. Yeah, 20 cents, maybe 10. Yeah, so small credit. And the thing also is that for those who would like to trade this Feb break a bit longer, I mean, you would have virtually nothing left in the market. 2380, so basically next to nothing. So we could maybe start with this one today and phase the trade out by end of the week. Let's move on to March reg, and this trade has taken a bit of a knock with the vol spike with the VIX. And now, I mean, if you look at, we know about what 40, 46, yeah, it's about a month and a half. So we can look at VIX as a possible proxy for volatility, 1606 here for the 18 volatility. This trade has taken a bit of a knock, but at the same time we managed to keep delta flat. It is actually slightly positive. I went for last week when it started falling on Monday. I went for a risk reversal, RR in short, basically selling a call credit spread to pay part of the PDS. The PDS was 37.20, 32.90, so about $4.3, and we got some back by the CCS. I think about 2.4 overall. So of course it was in my market view of a necessary profit-taking phase to one of those strong support levels. It looked like a measured adjustment. It could have gone for a straight PDS, which to me would have been a bit too directional in adjustment, or in a similar way we could have gone for a rollback, or at least closing this one here. And that's something that can still be done, but I believe the market will bounce back. And actually, in early in the European session, the futures are bouncing back to about 30 to 45. So I assume the market will stabilize above 31.70. So this trade is not doing too badly. We're losing a bit. Delta is flattish. There's no urgency to turn this delta negative. But that said, we could keep feeding some negative delta with additional risk reversal. So that's something that I could do, maybe something similar. As you can see, we can take profit on this one and maybe place another one below, about 34.25. So of course, there's no pressure to do anything right now. Delta is flat, and if we would just stick to normal Rhino management. No need to really buy a PDS, so instead of rolling down the CCS, we could go for another risk reversal, but at this point the trade is stable enough, and we would probably look at when SPX falls below the shorts 31.50, and delta would be, it's looking around 12.13, probably 14.15 by then. So the next trigger point is likely to be the 31.50, and we have support levels around 3200 or 3190, 3200, and then 3170. At this time, as I said earlier, the market is bouncing back a little, so probably nothing to do over the next few days. If we move to the B2B trade, the B2B trade, we did nothing. We stick to the standard guidelines, and here the delta is slightly positive. It's not doing too badly in terms of P&L, and we have to now look at 3175 as trigger point to start rolling back one or two broken butterflies. But so far so good. The SPX is right now around 32.40, 45, so we'll just have to monitor that price point. Okay, that's it for this first part. This video is going to be published as public, and I'm going to carry on with a private section at the end of this video for members of the class. Thank you for watching, and bye for now.